Hello, everyone. Thank you so much for joining us yet again on our Mortgage Minute Mondays with the Linda May Tomko and myself, Alex Ward. Linda May is an extraordinaire home financing advisor with Scotia Bank, and I am your favorite broker owner of Maxwell Devonshire Realty. Today, as you can see, no special guests, just Linda May and I chit
Just
chatting
stuck with
about
me.
interest rates. So Linda May, I'm gonna give you the floor first. You start us off, and then I'll chirp in as needed.
Well, we love your opinions and your take on this as well. So we're going to talk about rates. And as of last week, we had a rate drop slightly on prime. I feel like this rate drop was, well, there was a mixed bag. Like if you would have asked us on Monday which direction we were going with rate drops, we would have said we were 50-50. So when they did drop the 0.25, I believe it was on Wednesday, um, it I'm not going to say it was a shock because we've been anticipating rate drops for a long time, but there was some questions whether it was going to happen now or whether it was going to happen later into July. So we are now on the uh, other side of the monetary policy. We're now, into rate lowering world, which is definitely a funner conversation than 6 months ago. When we were talking about rates possibly increasing again, and so I feel confident that we will see another one or two rate drops coming before the end of 2024. I feel like Alex feels differently about that. He's a little more positive.
Positive and negative. Because I believe rate drops only occur when the price of oil goes down. And as you can see, it's now at $75 a barrel instead of over $80 a barrel. The announcement by OPEC that they will be opening up production for some of its lesser producers up to 500,000 barrels per day meant, and then somehow within 3 days, rates went down a quarter of a percent. As if price of oil continues to drop, you will then see your rates come. And if the price of oil drops quicker, your rate drops will come quicker. So
Mm-hmm.
as an Albertan, kind of a mixed bag. You want to see oil and gas definitely profitable because that means the province is profitable and
Mm-hmm.
lots of jobs are flowing into the province of Alberta that way.
Mm-hmm.
But that also is the largest reason why your interest rates may stay high.
You know what? I feel like we're a little bit of a mixed bag for other reasons too. I mean, our province is booming right now, like as far as housing, and we have a lot of people moving into the province. So with the rate reductions, we're going to see even busier times when it comes to housing. And so like I am a little on the fence on that, right? Like, yes, we want the rate drops because it is going to ease mortgage payments, and anybody that's in a variable rate payment is going to have, a little bit of a reduction on their payment after this rate drop and any rate drops in the future. But with rate drops and pricing on lending going down, you may see pricing on housing going up. So it's it's a little bit.
You'll see pricing for housing going up regardless of what the rates do. But the other thing to really consider with guarding your rates, oh my goodness, I was just thinking about this. What were you just talking about? You were just talking about the price of housing, competitive offers, jobs. What else?
Well, cost reduction on current mortgage payments. So if you're in a variable rate payment right now, you're saving about $15 per 100,000,
Right.
effective with
That
the
was it.
rate
That
drop.
was it. Right.
Yeah.
So, ironically, the Bank of Canada talks about how we're in a controlled inflationary period, while interest rates was one of the biggest indicator or one of the biggest reasons why inflation was going up. So, as interest rates go down, it'll naturally lower our inflation because we include interest costs in our inflation calculation.
Right. Yeah.
So, the Bank of Canada actually is the one that controls its own inflationary numbers, which then is what they use to tell you whether or not the interest rate can or cannot go up. So it going down will mean we might hit a deflationary period at some point if the rates
Mm-hmm.
go down quick enough, which then no economist ever wants to talk about because the prices going backwards does not help anybody.
Mm-hmm.
As far as economics are concerned, it helps the average consumer, of course, but
Unless you're in a variable rate mortgage, then that's a great thing.
right. Or if you're in a variable rate mortgage with company like Scotia Bank, where your payment actually does fluctuate based off your interest rate and it's not based off a trigger rate. If you're with some other
100%.
major institutions, your payment was steady. It was based off a what's called a trigger rate, which is why when rates went up at an accelerated period, people got screwed because their amortization had to change because their trigger rate was 5%.
Right.
Then all of a sudden it went to 8%, and they they couldn't pay off any of the principal with that kind of interest rate. So then they're
Yeah.
balloon. So yeah, if you're with a Scotiabank product, you have been loving and cheering on these rate reductions so that
Yeah.
rates can go down, but you were also never in as negative of a position as those that were with other potential financial institutions.
100%. And you should be getting a letter, I would say, within the next couple of weeks telling you that your mortgage payment, if you're in a variable rate product, is going down. So, and it should be around $15 per 100,000. So those are always good news.
And is
Good
that on
news
a
letters.
monthly basis, or like does it matter if you're in a weekly? Does it then get divided down to $3 per 100,000?
Yeah, yeah. I mean, it's an annual interest calculated daily, right? So it's that's basically monthly is what you would be saving if you're biweekly. I mean, if you're biweekly, you're on a little faster pay down. Um, so I would actually have to do the calculation on that, but you should still see. Actually, you know what? I can tell you. Hold on. Hold that thought, Alex. Um,
And if you're just tuning in, what Linda May is calculating right now is the interest rate reduction, or how your payment reduction on a weekly basis versus just the monthly basis with the 1/4% drop from the Bank of Canada.
yeah, biweekly, you know, it should be around the same, like I would say 10, under $10.
Nice.
That's per 100,000.
Right. Yeah. So then when does the Bank of Canada meet again?
So Bank of Canada will meet again July 24th. We'll see what happens there. Alex is thinking that we're going to see a rate reduction at that time. I don't know.
At that
We'll
time,
see
I
what
don't think at
happens.
that time. I think the big reductions are going to come closer to October when OPEC actually does open up the taps a little bit more, and then there will be some speculation that the price of oil will go down significantly. So that's when I am anticipating the major cuts. I predicted at the start of the year that there would be a 2% rate reduction. I'm nowhere close to my prediction yet, and we're almost halfway through the year. However, price of oil was not supposed to stay this high this long,
True.
so I got screwed. But I'm joking. Of course, it's been really good that the price of oil has stayed high for Canada and for Alberta specifically. Trans Mountain opening up
Yeah.
definitely also really helps Alberta producers, so and the Alberta economy. So that was fantastic to see because that was supposed to increase our GDP by a whole 1%, just that one project alone, which is a massive change in the GDP. So
So I wanted to just read off what was said about the rate reduction. So the bank governor said in opening remarks that the bank's monetary policy no longer needs to be as restrictive. We've come a long way in the fight against inflation. So basically, what they're saying is rate holds and rate decreases are coming. I don't know which days they are coming. You know, maybe we may see another reduction in July. I guess what I'm not as optimistic about it as you are. I think we'll probably see a hold in July, and then we'll probably see a reduction come September. But I could be completely wrong. So it's just usually when they do rate increases, they like to take the elevator up, and when they do decreases, they take the stairs. So we'll see what happens. But we
Yeah,
aren't we
like,
aren't we aren't going up. So
historically, rates drop quicker than they ever go up. This was unprecedented to see rates increase at the quickness that they did. So if history repeats itself, which it really tends to, this means once we start seeing rate reductions, we should see them happen quicker than they went up. They went up almost 2%
right.
in a calendar year. So by that logic, by this time next year, we should be down more than 2% decrease of rate.
We'll see what happens.
So you could see some quick and heavy cuts um, if that trend continues. But
So let's talk about
speculating, we love speculating. And you know what? We're going to talk more about this next week. It's been an absolute pleasure. If you have questions, of course, reach out to Linda May Tomko directly. She is your mortgage expert. Or if you have questions about real estate, reach out to one of the Maxwell Devonshire Realty professionals. They'll be able to tell you whether right now is the best time to buy or sell. I'm going to tell you the answer is yes, because the
it's
market
always a good
is
time.
going this way. So if you do have to sell and buy, win on the buy right now so you can win on that sell later. And everyone, I hope you're having a great day. See you guys later.